Hi, and welcome to Doctor's Financial. If you're stopping by the channel for the first time, my name is Dr. V. I'm a doctor of physical therapy that was able to find financial independence through investing in the stock market. And now, all the years in research and all the things I've learned through investing and about investing, I'm sharing it with the family. Today, I have a loaded video. I'm going to be talking about rule number 2 in the new investor stock commandments. And I'm also going to be talking about 2 semiconductor plays that I feel will be going up tremendously soon, and a penny stock. Yeah, a penny stock for some of you more seasoned investors to take a look at. But before we begin, anybody that knows me know I want to start always with the word of prayer. And if you would like, you can bow your head and pray with me. Heavenly Father, thank you for another day. Father, I pray for financial blessings. And I pray every person that receives this word be blessed immensely. And Lord God, let the words that I have prepared be a blessing for your people. May their cup runneth over. In Jesus' name, amen. Before we begin, if you get anything from these videos, I kindly ask that you give me a thumbs up, hit that like button, subscribe to the channel so you always be able to get these videos. I'll be putting them out more and more and more. And also share this with friends and family so that they too can be blessed and begin getting on the journey to financial independence. All right, let's get into rule 2 in the new investor commandments. Let me pull that up right here. And we're on rule 2. Dedicating a portion of each day to learning about the stock market. You'll be talking about verbiage, fundamentals, technical analysis, taxes, and sectors. All verbiage is the words that you hear in the stock market. And a great way to learn about the stock market and to learn about the words in the stock market is to go to this site right here, Investopedia. I just simply typed in P/E ratio, which is a great term to learn for you new investors. It shows, basically measures the value of a company and see how valuable a company is. But the main thing I want you to get out of this is just being able to go to Investopedia, look up the words you don't know when you're reading about stocks and reading about the stock market, and get a better understanding of it. This is a great way to learn how to fish and not just depend on others to give you stock picks, but to actually begin researching and picking for yourself, which is extremely important, especially in the market conditions that we're in now, which is a downturn. So if you're only getting stock picks from others, you may not have enough conviction to stay the course and then sell at a loss and, of course, wind up losing money. So definitely begin researching and learning the language simply using Google. One of the easiest things I've done. Fundamentals. All fundamentals mean is how a company is doing. It's just showing their books. Every publicly traded company has to report to the SEC. All the companies that's on the major indexes, New York Stock Exchange, NASDAQ, they have to report to the SEC. So let's get into what that looks like. Here's a chart, but let's get into the fundamentals. And all fundamentals mean financials. Here's the income statement of a company we'll be looking at, Taiwan Semiconductor. You can see they had a total revenue, TTM. That simply means the trailing 12 months. So from March of 2020 to now, you can see the amount of money that and that's in thousands. 100 billion there, 628 cost of revenue, pre-tax income, EBITDA. So all of these words here on the left, you can plug them into Investopedia and find out exactly what they mean and exactly what they're showing about a company. We can also look at Texas Instrument, another company I'll be looking into, go to their financials. But this time you can actually go to the balance sheet and see the assets, liabilities, the debt, which are all of these things are extremely important when researching a company to invest in. You want to make sure a company has strong books. You want to make sure the assets are way more than the liabilities, and that the total debt that the company is carrying, the assets can cover the total debt. Some of those things are very, very important when researching and looking at a company. And that's the fundamentals. Technical analysis. All that means is how the market feels about the price of a company. And all the market is people like you and me, and then of course the big hedge funds, the big whales, but all of those things are controlled by people. So let's go into technical analysis. Come back here. Company is Texas Instruments. We just go into their chart. And funny thing about Texas Instrument, I really like the company, but every time I bring it up to other people, they simply say, "You mean a calculator company? You want us to invest in calculators?" A lot of people don't know Texas Instruments is one of the biggest semiconductor companies in the world, one of the biggest chip companies in the world. And right now, there's a shortage in chips, microchips, for devices, for cars. General Motors just reported that they had to, in some cars, they had to stop making. Ford had to stop making cars for a while because they simply didn't have enough chips. So I expect the chip makers to really do well in the upcoming months because they have to be able to supply these chips. We're running out of microchips. There's so many devices that require them. Everything we do now is electronic and it requires a microchip. So looking here at the chart, for a new investor, only a couple things I would really want you to learn right away. And that's support, which is the bottom of this graph, the bottom lines. Where does it change direction? That's support. Change direction from down to going up, from down to going up. That's support. That's support. That's support. That's support. And also, you want to look at resistance. Resistance is that top line. That's the line where it bounces back down, where it can't really get past that. Now, this purple line I have here, that's called the moving average. And the moving average I have is the 50-day. So in this 3-month chart, looking at the 50-day moving average, what we notice with Texas Instrument, when it got close and dipped below that moving average, it quickly bounced back up. And as we can see, it's approaching, it's actually touching now that 50-day moving average. And I did buy a little bit more of Texas Instrument today because it came back to this line, and I'm expecting a turn up. However, if it at this 170.59 point, if it does go back down, it'll probably first test 168, 165, and then here at 162. I expect 162 to be a strong support for Texas Instrument, but that's if it falls below this $170.59 line here. But I'm definitely expecting for it to go back up. And that's the basics, some of the basics of technical analysis. That's just some of the basics of technical. Now there's a lot more to it. You're gonna hear a lot more words, Fibonacci retracements. I could have put this same chart in candlestick format, and it would have showed me the highs and lows of the day, where it opened and closed, so on and so forth. But if you're new to investing, don't overwhelm yourself at first. First, learn the basics, and then begin to learn some of those other components of technical analysis. If it seems hard right now, believe me, it isn't. This stuff is easy to pick up on. I've been showing it to people. Showed it to my wife. I've showed it to my sister. I've been showing it to many people, and they catch it like that. So believe me, it's not really hard to pick up on at all. And getting back into taxes, short term versus long term. So if you buy a stock and you hold it for more than a year, it's considered a long term investment, and you're taxed at the capital gain rate, which I believe now is 15%. But go and double check with your tax advisor for what the capital gain rate is for the year 2021, because I believe it'll be changing. But go in and double check to make sure with your tax advisor. If you hold it for less than a year, that's considered short term, and that will be taxed at your current income tax rate. So whatever your income tax rate is, that's what the money you make in the stock market will be taxed at if you hold a stock for less than 1 year. Now, if you take losses, no matter how much the losses are, the most you can claim on your losses is $3,000. But the remainder of your losses will be carried over to subsequent and following years. So if you do have losses, don't worry too much. You can use your losses in the stock market as a tax write-off. Now, deferred tax accounts. Simply put, IRAs. I believe every person in this country should have an IRA. If you're an adult, I believe you should have an IRA. If you're a working adult in this country, you should have an IRA, unless you're just super rich. But I'm just talking about normal, everyday people such as myself. We should have IRAs. We should be saving towards our retirement, and we should be getting tax benefits from it. And the government understands that, so they give us the opportunity to have an IRA. And all IRA means is individual retirement account. There are two types. You should research about which type is best for you, but one is the Roth IRA and the other is the traditional IRA. Basically, all a traditional IRA is you put the money in, you get a tax deduction for it, so your income tax for that year should go up a little bit higher, and I believe the max for this year will be $6,000. And at the end, once you retire and you're over 59 and a half, or whatever age you decide to take it out, but you can't take it out before 59 and a half, or you'll incur a 10% penalty. So after 59 and a half, or whenever you decide to retire, you can begin taking that money out, and it'll be taxed as income tax. Now, I believe it's 71, 72. You guys can double check for me. If somebody knows the age for sure, you can leave it in the comments. But I believe it's either 71 or 72 when you have to start taking the money out. They force you to start taking money out of your IRA at that point. And with the Roth IRA, you just put the money in, but you don't get any tax benefits on the front side. But on the back side, when the money comes out, you don't get taxed at all. So all of the interest that you made on your money grows tax-free in a Roth IRA, which is great. There are also other tax deferred accounts like 529s for your kids. You can also open a custodial account for your kids that's taxed at a child's tax rate. And then you can also have what's called a HSA. I would encourage all of you to look into all the different types of tax advantage and tax deferred accounts. And think about opening up one and take advantage of the tax benefits that the government has given to us. Next are the sectors. There are 11 sectors in the stock market. We're going to go in another video at another time, look at all 11 of those sectors. But I encourage you to go and research the sectors. Also, research the industries within those sectors. And you'll begin to see how the big companies, such as Apple and Amazon, they're in multiple industries. They don't just do one thing. They're in the tech industry. Amazon is in the e-commerce industry. Apple is also getting into the electric vehicle car industry. So you want to invest in the big companies that are spread across multiple industries and have multiple streams of income. They're making money all kind of ways. That way, if something goes down, something fails, or something isn't doing as well, their other streams of revenue will hold that company up. Also, you want to look at emerging industries, such as the space industry. I'm big on space. I do believe we will be going out of space. They just landed the rover on Mars. You got companies that are taking people out of space on basically outer space field trips that people are paying millions, hundreds of thousands, and another group that's not publicly traded yet, but they're taking a group out and they're paying over $50 million for those tickets to go to the International Space Station. So space and going into space and space exploration, those type of stocks are going to be huge. You want to be getting into emerging industries on the ground floor. So as they run up, you can take advantage of the financial run up and it can benefit you. So that's all I have for now about rule number 2 in the new investor stock commandments. If you didn't see rule number 1, I would suggest you go back to my older videos, the video before this, and also my first video, and just take a look at the new investor stock commandments. It's awesome. It's all the things I wish I knew when I began investing, and it'll help you and minimize your mistakes as a new investor. Now, let's get into Texas Instruments. As I said before, there's a semiconductor shortage. Now, looking at the 6-month chart, you can see what a company like Texas Instrument does as far as the basic technical analysis. That line is straight up. I mean, you see the peaks and valleys, the ups and downs. But if you just really take a look at all of the highs, each high is higher than the next high. And if you look at the lows, each low is higher than the next low. So that's a nice progression line going forward. And that's what you really like when you're invested in a company. And the reason I'm looking at Texas Instrument and Taiwan Semiconductor, just like I said before, there's going to be a shortage in chips. We want to go and get those chips. And we can see they both were down today, but the whole market was down today, and we're going through a correction. And I'll do a video about correction soon, about what a correction is soon, and comparing a correction to a crash and understanding how do you trade in a correction. But basically, you just trade, you buy dips, and you hold on to your stock. Don't sell at a loss. And that's why it's important that the money that you're investing in the stock market is money that you're not going to need for years to come, so that you give the money an opportunity to grow. A lot of people like to say, oh, you should invest money you're not afraid to lose. Well, all my money, I don't want to lose any of my money. So I don't like that mentality of investing money that I'm not afraid to lose. I don't plan on losing. But what I do plan on is not needing the money right away, giving that money a chance to mature and grow. So that's the mindset you want to have. Invest money that you're not going to need for 5, 10 years. Think about investing in that thought and in that mindset. Now, traders, that's a little bit different. And trading and investing is 2 different things. But that's 2 companies that I'm looking at, Texas Instruments and Taiwan Semiconductors. They're both in the same industry, and there's other big players in the industry such as Nvidia, Intel, AMD. But look into the chip industry, microchip industry, the semiconductor industry, because there's a shortage and these stocks will be going up. Now, a penny stock. I know you guys like penny stocks. Everybody like penny stocks. Penny stocks are great, but you can't build a portfolio on penny stocks. It's just something to dabble in. I wouldn't put too much money into a penny stock. But one penny stock that I did have my eye on and that I'm looking at, and I actually sent this stock out on my Instagram. So I'm going to leave my Instagram link in the comments, in the description below, so that you guys can see what I'm looking at during the day. And when I sent this out this morning, it was trading at about 185. And then around lunchtime, it popped all the way to 212. So if you can see, if you would have got in when I first sent it out on my Instagram, you would have had a 14% gain. But you would have had to know to get out at that point. But it did give up some of those gains. But in the after hours, it did go back up. But that's not why I really like this company. Let's get into why I really, really like Caldarius, however you pronounce it. But what I really like about this company is this. They're a biopharmaceutical company. that's looking to treat critical limb ischemia. And if anybody have had someone in their family with diabetes, they know exactly what I'm talking about. Diabetes destroys the microvascular system. So blood stops traveling to your distal limbs, causing necrosis and causing that portion of the limb to die. And eventually what happens is they have to get an amputation. And unfortunately, a lot of patients that come into my clinic, I see this often, where they've had a toe cut off or half of their foot cut off because of critical limb ischemia due to diabetes. What this company is looking to do and has proven in stage 2 clinical research, so they have a lot more research to go, but the research does look very promising. So the CD34 plus cells help regenerate new capillaries. They help feed the tissue and reverse necrosis, which is a game changer. So I'm definitely rooting for a company like this. Now, what the company is doing and what the stock is doing is two different things. This is a penny stock and it trades as a penny stock. So understand that is a lot of volatility. The stock can go way up by 30, 40, 50% in a couple weeks and then also come way down. You see, it traded within a 14, 15% range with just in just a matter of hours. So be careful with that. Don't put a lot of money into a penny stock. But I'm not a financial advisor, so I would suggest that you speak with a financial advisor after doing your own due diligence. I'm just showing you this stock just to put it on your radar. You look into it, do your own due diligence. Comment below, tell me what you think about it, and talk to a financial advisor. Now, in phase 2 clinical studies, it consistently showed benefits in safety and function. It reduced amputation. It improved function in claudication, and all claudication is blood clots. It improved how the blood moves. It reduced angina, and it improved mortality in people with cardiomyopathy. So another good thing about this stock, about this company rather, is they're getting fast tracked in Japan. So Japan's equivalent to our FDA, which is the PMDA, has given them clearance to move forward, and they'll be investigating this company faster. So we can be looking for them to probably clear and get approval in Japan a lot sooner than here in America. But once they do clear in Japan and it's proven that this drug does what it says it does, it's going to be a game changer, as I said before, and it can send this stock just skyrocketing. And it's already a registered name, Honduras. So I believe the company really knows that this drug should be working. Alrighty. Well, that's all I have for you in this video. If you got anything from the video, give me a thumbs up, subscribe to the channel, hit that notification bell, and also share it with the family so that they can begin investing. I believe we all can begin investing. In my first video, I talked about, in my video previous to this, when I talked about mutual funds and index funds and ETFs. It's a great foundation. Now we're getting more into single stocks, and I'll be presenting more and more companies. But guys, let's just begin investing. If you don't have a brokerage account yet, you can go to Webull and deposit $100 and get 2 free stocks. And if you use my link when you do that, and I'll leave the link in the description, I'll get 1 free stock. So it's a win-win. Thank you guys. I hope you all come back for more videos. This is all I have for you. You guys be blessed. Have a great day.